Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service financial services firm headquartered in Boulder, Colorado. 2022 was a disaster. Both stocks, the unmanaged stock market indexes, the unmanaged bond indexes, down pretty sharply, double digits, very unique that both of them went down at the same time. If you watch all my videos and newsletters from 2022, I deconstruct some of my thoughts about why that is, with a supply chain issue, which led to an interest rate issue. With the reaction to that, we've got both fiscal, tons of money, money supply increasing. So we've got some fiscal, we've got some monetary, we've got supply, all these things coming together. I will tell you that January was one of the best months in years for both the unmanaged stock market indexes and bond indexes. As a matter of fact, you're going to see this in a second, a good 1/3 to 1/2 of all that was lost in 2022 was made up in just 1 month, which is January. And I will tell you that this is now the 4th month of kind of a recovery. October, November, December, and now January. I don't know what the rest of the year, holds for us, but I'm a broken record. I said 3 out of 4 years are negative. That means that sometimes 3 out of 4 years are positive. Excuse me, quite the opposite. 3 out of 4 years are positive. 1 out of 4 are negative, which means that we sometimes just have to be patient. And the best thing that we can do is be patient. Up on the screen there, you're going to see this is the unmanaged stock market index, the S&P 500, going back to 1980. And you'll see that so far this year, this is the first week of February, it is positive. You'll see last year, kind of that arrow there, that was last year. This next one up on the screen is the unmanaged bond index. Bonds went down last year, kind of in a reverse to the increasing interest rates. And so far this year, you can see that a good third of the decrease in the bonds has been made up already. You can see that right here. I'm going to put in a block there, depending on the duration, the length of a bond from short to long. You can see what the year-to-date return has been on a bond right there in that highlight. This next screen, I just want to highlight the bottom right corner, historical markets drawdown and the next 12-month rebound. You can see the tech bubble, the global financial in 2008, you've got COVID. After there's been a decline, there's been a great recovery in the next 12 months. I don't know if that's what we're in. Have no idea. The future is inherently unknown. But the way I like to think of it is, you've got your Apple Maps, or you got your Google or your Waze, whichever way that you get navigation from to find some place on your smartphone, and you thought it was going to take you 30 minutes, and you see that there's an accident up ahead. It was unplanned, it's unpleasant, you hate it, but you know what? The path that you're on is still the right path. Doing anything else, it's so easy to want to get on a side road when really perhaps that's really being sidetracked. This next sheet up on the screen is showing, and I'm going to put a circle around it, which is inflation. Inflation in the last year and a half was significant, and it was the reaction to it that caused a lot of the bond decline over the last 12 to 18 months. Now what you'll see is on this next chart is that sharp increase all through the year of 2022 causes, the bond market goes down. You'll see the decrease that is expected from the Fed. We're having, we're getting a handle on the inflation. Let's go back to that chart that I just showed, the previous one. You'll see that on the right-hand side, inflation is starting to come down, starting to creep back down, which is wonderful. So the reasons that bonds went down in 2022 and the last little bit of 2021 is the environment is reversing, which is very, very good. I could sit here and talk about other encouraging signs, both from the economic forecasts and the in the stock market forecast and the reaction to it. But I want to keep this one short. All I really have to say is, the last month has started to negate some of the very long and painful, kind of quarter upon quarter, 3 quarters last year that were negative, 1 quarter that was positive, and that 1 quarter that was positive was the last one, now going into this first quarter of 2023. I'm going to continue to do my newsletters and videos throughout the year. I'm going to try to do them a little bit more often as we really work to get to break even and then going back onto our original plan, which of course is, why would you have investments if you don't believe that long term, they're going to be higher than they are today? So Mike Brady, Generosity Wealth Management, 303-747-6455. You have a great day. See you. Bye-bye.